Now let's try to calculate the variances. Instead of going to formulas, it's better to practice a question here. Take 2 minutes and read down this question.
So the top part is all budgeted, right?
Yes.
Okay.
The actual one is in the last 2 lines.
I read the question, sir.
Okay. Now, whenever we have to calculate any variance, first here we want to calculate the sales variance. So the first variance we will going to calculate will be the total variance. What is total variance?
Oh, sorry.
Sorry?
Is sales variance and total variance the same thing?
Yes. Total sales variance, yes. So
Okay.
total variance we can say, or total sales variance. Now, what is total variance? That we will compare our budget with the actual. Even if the level of activity is different, doesn't matter.
Okay.
Then we will further explain this into further detail. And we will break down our total variance so we can see the flex budget concept as well. We will actually going to use this flex budget concept. So this total variance, then we will further break down into 2. Activity variance and second, price or cost variance. Price variance will be in dollars. Activity variance will always be in some activity. Activity can be, if we are talking about sales, so it can be number of units sold. If we are talking about labor, it can be hours. If you're talking about materials, it can be kilograms and so on. So this is in further 2 ways. Now, these are not separate variances. The difference between activity variance and price variance will always give you the result of total variance. So activity and price variance or cost variance is a further breakdown of the same total variance. So you can better understand that if total variance is, for example, adverse, so sometimes it's possible that in activity we are having favorable, but in price we are having adverse. So mean if we are getting an adverse variance, so this is solely because of the price variance and so on. Okay, now let's extract the data from this question. First thing is the budgeted information, the selling price. The selling price is $21. This is what? Budgeted price or standard price. Standard selling price. This is budgeted $21. Then further other information that is relevant to us to calculate the sales variance, budgeted sales unit. This is what? Budgeted activity of 740 units. Then actual sales revenue. This is what? This is the actual activity or actual cost. Sorry, actual activity for the actual sales unit. So budgeted activity is 740 and actual activity is 795. And then the actual sales in total is given. This is $16,200. So we got all this information. Clear with this thing so far?
Yes, sir.
Okay. First, calculate the total sales variance. To calculate the total sales variance, we need to compare budget with the actual. So to calculate the budget, what we can say, budgeted activity multiply budgeted price or standard price. This is budgeted minus actual activity into actual price. Now, how much is this actually? Budgeted activity is in this question is this 740 and budgeted price is 21. This is our budgeted results and actual results are already given in total $16,200. Now let's calculate this. 740 into 21. So budget was 15,540. This was our budgeted sales revenue. Actual sales revenue is 16,200, which is higher than the budgeted.
Yes.
So this is
Yes.
660.
Yes, sir.
Favorable variance. Clear with this thing, how to calculate the total sales variance?
Yes, sir.
Now let's calculate the activity variance based on number of units. So it's an activity variance. So first we need to take the activity. Budgeted activity minus the actual activity. And then we need to flex it. So multiply with the standard price or with the budgeted price. Budgeted activity was 740. Actual activity is 795, which is higher than the budgeted. Into standard price is $21. So how much will be our activity variance? 740 minus 795 into 21. This will be 1155. Clear with this thing?
Yes, sir.
And this is favorable or adverse? Activity variance.
Also favorable.
It's favorable. Why? Because the reason is we sold more units actually than the budget. Budgeted, we were supposed to sell 740 units, but actually we sold extra units or more units than budgeted. So it's a favorable variance. Clear with this thing?
Yes, sir.
Okay, now let's calculate the price variance. To calculate the price variance, now we need to compare the prices first. So actual price minus the standard price or budgeted price, multiply with the actual activity, actual number of units that we sold. Actual price is how much?
Oh, 1 minute.
Actual price is not given here.
No, 16,200 divided by 795?
Yeah, we can do that.
20.377. So 20.4?
20.37 or 20.4, yes. So 20.4 minus the standard price. Standard price is how much?
21?
$21 into actual activity. Actual activity is
795.
795 units. Now here see, standard price was 21. Actual price is less than that. So let's compare 20.4 minus 21 multiply 795. So we will get 477.
Yes, sir.
Now this is favorable or adverse?
Sir, I have a question about this.
Yes.
If it comes out negative, is there such a thing? If it's negative, then it's favorable, and if it's positive, then it's not.
It's better not to go for that. Work conceptually. So later on, when you go to the F2 level and F5 level, then conceptual working will be better. Otherwise, if you just consider plus and minus, it will be like a rote learning. So conceptually think about that.
No, but conceptually, though, if I look at it being less anyways, 20.4 tells me it's favorable.
It's favorable. Why so? We were supposed to charge a selling price of 21, but we charged less selling price, 20.4. We were supposed to receive $21 from a customer, but actually we received 20.4 due to any reason. Let's say we give discount. Discount is a selling expense. So we were supposed to collect $21 from a customer for each unit, and we are actually getting $20.4. So we are getting less from the customer. So this will be an adverse variance.
Adverse variance.
Clear with this thing?
No, but then if we are actually basing it on the numbers anyways, then why do we have to multiply it with the actual?
Let me give you an idea. Just give me a minute. Okay. Now let me give you an idea. Let's expand this equation. So how we can do actual activity into actual price, right? And then actual activity into standard price. This is what we have to do. So actual activity into actual price, this is our actual sales, 16,200. Or then actual, the flex one, actual activity is how much? 795. Standard
Yes.
price is 21. How much we were supposed to get from the customer? 795 into 21. We were supposed to get 16,695. This should be our sales revenue. But actually is how much? 16,200. So
This
means
makes sense.
it's a 495 at once. I didn't do the rounding, so that's why it's a little bit different. So 495 at once. Now it's very easy to understand. This what we were supposed to get, and this is what we actually got. Clear with this thing?
Yes.
Okay. But why I'm solving this thing, like in brackets, it's easy to understand, and it will going to make easier for you to solve questions later. So now one more point here. Let's do it 495. Yeah, that will give an exact one. So instead of 477, let's take the 495 adverse.
Yes, sir.
So price variance is 495 adverse. It's a bad one. Activity variance is a favorable one, 1155 favorable. Let's calculate the difference between that. Activity variance 1155. It's a favorable one, so plus. Adverse, yeah, the price one, it's 495 adverse. It's a bad one, so minus. It's an adverse one. The difference between these two should be the total one. So 1155 minus 495, how much we will get? 660. And this 660 is a plus or it's a favorable. So now how much was our total variance? That was 660. How much is our activity? This much. And how much is our price? This much. Now we got.
So basically, we're adding them up.
Sorry?
We're adding, since we're actually adding the two variances, since it was an adverse, that's why it's been subtracted, right?
Total variance will always be the net off between activity and price variance. Because what we did, total variance is, with the name it's clear, it's a total variance. Activity and price is the further breakdown of the same total variance. Clear with this thing?
Yes, wonderful. Yes.
Now, why we need to do this breakdown? I think total variance is enough. 660 favorable, so sales are good. Why we need to do breakdown? Any idea?
It actually will help us point out where there's more of a variance. It just, we can departmentalize our variances on the basis of activity and price.
Yes. The reason is investigation. When we have to investigate the reason of our variances, so this further breakdown will help us to understand what can be the possible reason behind that. For example, in this example, the total sales variance is 660 favorable. So it's good. But maybe 660 favorable is less for us. So if we go for further breakdown, we can see the activity variance is 1155 and it's a favorable one. And price is 495 and it's an adverse one. What can be the potential reason behind that? That activity is favorable, price is adverse, total is favorable. Can you give a justification for that?
Sorry, sir, I did not get your answer.
Think of an example that why activity is favorable, price is adverse, and total is favorable. What can be the possible reason for that? Any reason that you can think of?
Because one was way more favorable and then the adverse effect wasn't as bad as the favorable effect of the activity.
Anything else?
Get your question. I have not understood your question, sir.
The question is, activity variance is favorable, price variance is adverse, right?
Yes.
And total variance is also favorable.
Yes.
What can be the reason behind that? Think of an organization. They got these variances. Now you need to tell to the manager what happened, what goes wrong. So what can be the reason behind that?
because they were able to sell more.
We sold more
Therefore,
units than expected.
yes, and even though discount was given, the sale price was less.
Yeah,
But it wasn't that less.
very,
In effect, it helped them sell more and,
very good. This is the
increase the
point.
sale.
Yeah, this is the explanation. Very good. Activity variance is favorable. Mean that actually we sold more units than expected. Our sales were higher, we were selling more units. So mean the sales team, which is on the field or on the market, so obviously they are doing a good job. They are trying to sell more number of units. But price variance is adverse. So mean whatever price we are supposed to charge, we are not charging that price. Maybe we are giving discounts, and that extraordinary discounts lead to adverse price variance. Now what happens? Do you really think this favorable variance is a good variance? No, maybe not. Why so? For example, if my budgeted selling price is 21 and I'm charging $13, so activity variance, I'm going to get a very big favorable variance, even bigger than that. Why? Because something worth $21 and I'm selling it for $13, customer will going to buy it like a crazy. So activity variance will going to be a very big one. But on the same time, price variance, I will going to get a very big adverse variance. Why? Whenever you decrease your price or whenever you are going to decrease your selling price, your activity variance will going to become favorable. Lower the prices, higher the activity. Totally opposite to that, if my budgeted price was 21, I start charging 40 for any reason. So my price variance will be very big favorable variance. But at the same time, the activity variance will become adverse. Why? Customer will going to buy so many units which worth 21 for 40. He will never going to buy. So activity variance will going to get adverse at the time and price variance will going to get favorable at that time. So what is needed here? That you need to, because variances are dependent upon each other. So to get a total favorable variance, a good variance or a true favorable variance will be where activity and price, at least both are favorable. So activity and price variance, they are dependent upon each other. If you want to increase the activity, you have to decrease the selling price. One will be favorable, one will be adverse. This is not a genuine business activity to do. But if your product is really good, so you do not need to give some unnecessary discounts and you are getting favorable in activity and price, both of them, so mean you are doing a genuine business. Clear with this thing?
Yes, sir.
Yeah. So activity variance and price variance, they are interdependent upon each other. If one will get some result, it will always going to have some effect on the other one. Clear with this interpretations are more important.
Also,
Sorry?
sorry?
Yeah, tell me what you're saying.
I'm saying since we have the budgeted sales and we have the actual sales, we can also say, at 21, we were expecting to sell 740 units, but we have actually increased our profits and we've increased our
Overall.
Yes. Overall.
At the end of the day, yes, at the end of the day, the total variance is 660 favorable. So we can say that it's a good activity because total variance is favorable. But how we get this favorable variance? Remember, by decreasing our prices. So you should know the reason behind that. This is more important, right?
Yes.
We cannot say, okay, sales performance was good, they were charging the maximum prices. We cannot say. We need to know the reason that if we are getting a favorable variance in total, what is the potential reason for that? So with this example, the potential reason is they are giving discounts or they are decreasing their selling prices. That's why we got a favorable variance. So overall, as total variance is good, so obviously it's acceptable. But why I'm identifying these variances? Because when we are going to analyze the direct material and labor, so then you will get a better idea. Because all variance, like activity is dependent upon the price or price is dependent upon the activity. Same like this, sales variance is also dependent upon material and material variance is also dependent upon labor as well. So I will explain you later on this thing. Clear with this thing?
Okay. Yes, sir.
So for now, at least we find out the reason. Any questions so far?
No, sir.
So remember, we got the favorable sales variance because we decrease our selling prices and we increase our level of activity. Now think, when you need to sell more number of units, you need to do more production. When you need to do more production, you need to buy more raw material. Agree with this thing?
Yes, sir.
Yeah. So to sustain higher sales, you need to do more production. And for more production, you need more resources, more direct material, more direct labor. Let's see now direct material as well.